You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-33.
Wow. Let me stop the hurt. Okay, so we got another corrupted intro file. All right, so I won't put you through the agony of listening to that. Yeah, Tim, I heard it back through my headset that time. All right, welcome back. Today's Thursday, 11th day of June, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage, cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. Now, that method is best because it gives you access to the chat box so you can ask questions, participate in the discussion. The original method that I gave you, the one where you go to the homepage, when you're out of the office, away from the desktop, then do the cfrn.net/live. If you've already got YouTube running on your computer, or Facebook, most folks do, or Twitter, you can just jump onto our live stream from any of those social media platforms. In most cases, just by typing CFRN into the search box, and you'll get a little pop-up that says the show is live right now. And you can join us that way. You just don't have access to the chat box, although if you are a member, or if you're on the trial, you can send messages to me via Telegram while the show's live, and I'll see those little pop-ups on my screen. Okay, so big day. Wow, got lots to talk about. Let's open with a word of prayer. Dear God, we thank you for your blessings, your mercy, and your grace. God, we're still hoping we're going to wake up. We're hoping that we'll open a sleepy eye and think what a horrible dream that was. But we won't, will we, God? What we saw was not a dream. People did fall sick in the street. It came out of nowhere. An invisible threat. And lives are lost. The rioting we saw in the street, men's hopes and dreams burned, demolished, destroyed, wiped off the map as if they never existed by an angry mob incited because someone broke one of your 10 commandments that says, thou shalt not kill. It doesn't say who you shouldn't kill, it just says, don't kill. So God, we know that what happened in Minneapolis is bad, but we know that what's happening in our streets today across America, that's bad too. And it's touched every part of our world, God, this world that you gave us. There's a ballet dancer who will no longer dance, a doctor somewhere who will no longer heal, a church has lost their priest, a classroom is minus a teacher. Cora ran a food pantry and Paige was a counselor, and Dana was only 3 years old. Wonder who held her in the final moments. We are sad, for as the innocent are buried, our innocence is buried as well. We thought we were safe. Perhaps we should have known better. 9/11 should have taught us something. And so again, here we are, God, we come to you. We don't ask for your help, we beg for it. We know what you can do. We've read the stories in your word, the accounts of what happened. We've pondered them, and now we plead, do it again. Dear God, do it again. You rescued Joseph from a pit. You can do the same for us. So we pray, God, do it again. And the Hebrews, slaves in Egypt, you protected their children from the angel of death. We have children too, God. So we pray, do it again. And Sarah, well, God, you remember her prayers. You heard them. Joshua, you remember how fearful he was, but yet you inspired him. And those three women at the tomb, the empty tomb, you resurrected their hope in you. And Thomas, who was full of doubt, you took every doubt away. So we pray, do it again, God. You changed Daniel from a captive into a king's counselor. You took a fisherman named Peter and made him Peter, an apostle. And because of you, David went from leading sheep to leading armies. So we pray, do it again, God, because we need counselors today. We need apostles today. We need leaders. So we pray, do it again. Most of all, do again what you did at Calvary. What we saw here on that Tuesday, you saw there on that Friday. Innocence slaughtered. Goodness murdered. Mothers weeping and evil dancing. Just as the ash fell on our children, the darkness fell on your son. Just as all hope was lost. And by dusk, as this time passes, as we enter a new period, a new area, a reawakening, a rebuilding of this country, what foundation? What foundation will we build it on, God? We want to build it on your foundation, but we need you to move today just as you moved then. We need you to do it again. And Father, we pray that your mercy be upon our president, our vice president, their families. Grant to those who lead us at all levels of government wisdom that is beyond their years and experience. Have mercy upon their souls and all the souls who have departed. God, give us grace that we might forgive one another and that we might believe. We pray, God, that you look kindly on us, upon your church. For 2,000 years, you've used the church to heal a hurting world. We volunteer ourselves today to be your church, to help heal a hurting world. In Jesus' name we pray. Amen. All right, guys, here we are. Thursday is Dr. Tom Day. So, let me give you the numbers from around the world real quick. We had a great pre-market strategy session, and then we had a follow-up session that ran a lot longer than I had expected it would. But we had a great time, and those videos will be available later today. All right, these are the cash markets here in the U.S. The Dow down 1,254 points, 4.5%. NASDAQ down 297, 3%. S&P 500 down 123, almost 4%. And the Russell 2000 down 82 points, 5.5%. In the commodity basket, crude oil down $3.21, trading $36.39 last. That puts crude down 8%. Gold up $24.90, trading $17.45.60 last. That's a gain of almost 1.5% for gold. Silver has gained 17 cents on the session, printing $17.97 last. gain of almost 1%. In the Asian markets at the close, Nikkei down 652 points, 3%. Shanghai down 22, and the Hang Seng down 569, 2.25%. And in European markets, the theme continues. No one seems to like what Jerome Powell had to say yesterday, because the news this morning was, well, not bad. In European markets at the close, FTSE down 252, 4%. DAX down 560, 4.5%. The CAC down 237, 4.5%. Needless to say, it's a red day in Asia, a red day in the UK, and a big red Radio Thursday here in the US of A. Let's go to Michael, get a recap of everything that happened in the live training room, and I'll be back. And if John shows up, we'll talk to John. Dr. Tom here at the top of the hour, as he is each and every Thursday. We'll recap the alerts from last night. We'll recap the big picture alerts. I think all of those found their target. So, all that and more. Michael, take it away.
Okay. Just a reminder to everyone, we rolled gold today to the Q contract, which is August. Tomorrow, we're probably going to be rolling all the stuff on the CME. Yeah. Yep, this morning. Oh, you know what? No, I think we had it. Remember, Microsoft rebooted on me, and so my workspace wasn't saved. That's why I had to roll it this morning. But yeah, we rolled it a while ago. Yeah, it was just okay. Here we go. Good afternoon, everyone. Today is Thursday, the 11th day of June 2020. If you've not taken a free trial with us, go to the home page at CFRN.net. And right here, it says free 5-day trial, no credit card required. Click on that, and you will be brought to this page right here, where all we ask for is your name, your email, your phone number. And you can fill this out if you want to. Hit the send button. Once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay. All right. Results. Spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. I have to say that. Today is the 11th day of June, 2020. We lost 8 ticks in gold, and we made 24 ticks on the ES. Put us at plus 220 on the morning session. Today it took 33 minutes and 4 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 6 trades. You can see ES right here is putting in new lows right now. On the month, we're up 2,786. That's over 9 trading days, averaging $309 per contract per 2-hour trading day. On the year, we're at 39,201. That's over 106 trading days, averaging $369 per contract for a 2-hour session. Okay. Now, let's get into it. You see all this movement right here? This was all during the break. It was a trade there, a trade there, a trade there, a trade there, a trade there. That was all during the break. On the other side, on the flip side, there was a long trade right in there. But we only had 1 trade on gold today that we actually did do. There was one here that we missed. Our first trade of the day, I think. No, it wasn't our first. It was our 3rd trade of the day. It was right here on gold. And we stopped out, and then it went and did what it should have done. There really is, during the morning session, there wasn't a lot of opportunity on gold. There was a long right here that didn't get filled on. And no, if I draw a trend line like that, right there. And well, I already don't know what happened during the break. So you guys know about that. All right. On the euro, we had one break-even trade. Now, if you're doing the YBR, there are a lot of trade opportunities with the YBR. Right here, blue, down close, red, bearish separation. Here, let's see. That was our one trade. It was our one break-even trade. We missed this one this morning. I was just getting logged in because I had to restart everything. Okay. And over here, now this is during the break. We had a red YBR right there. Bearish separation and a down close. We had another one right here. We had a long right there. Just using the YBR. Okay. But we ended up break even on the euro this morning. Okay. On crude, this is 2 days in a row we didn't take a trade on crude. That is really unusual. If we were doing the YBR trades, there were trades in there. There's one right there. And the cycle's going up too steep on that one. It's going down too steep on that one. It's just not set up. But if we were just doing the YBR trades, there's a ton of opportunity. Right there. Move down. Again, if you have not gotten the hang of the YBR trades and you want to watch a video about it, you can go to CFRN.net/YBR. Yellow Brick Road. Right. That was the one we missed right there. There's another one here we didn't get filled on. And then it gets into the break and it's just tanking here during the break. Now, if we look at this on a larger time frame, you see we dropped from 38.55 so far, $3 lower, down to 35.80, just about $3 lower. That's a huge drop in crude. Okay, on the ES today we had some pretty good luck with the ES. Oh, I see luck. Pretty good opportunity with the ES. Hang on, it's scrolling back. Scrolling. Let's start at the beginning and move backward. Okay, so here we go. This is pretty much where it all started. You know, it was moving around quite a bit today. All right, so we get in here. Now right here was a momentum shorting opportunity. Would have been a break-even trade. I know it looks nice after the fact, but I know during the trade it would have been break-even. And right here we have a nice long trade that we missed. Right here we have another one that we missed. We picked up this one, but I wasn't paying attention to it, and it ran up here. And I should have taken some profit out of that, but I ended up with the break even on it. over here, we were able to grab this one for 16 ticks. And oh goodness, yes, there was a trade there. There was a trade there. Then it flipped around and we needed to start the trend. And it did, and there was a momentum short trade right here. That would have been a break even. We picked up 8 ticks on this to put us at plus 24 in the morning session. And there was a trade right here on the short side. I don't know why I didn't see it, but nevertheless, I did not. And a break-even trade way over here. A long trade, well, see, we would have to adjust that to be like that. And a long trade right there. Okay, and then we get into the break, and I looked at the larger time frame a minute ago. Just so you could see what I'm seeing on a 15-minute chart. The high of the day was all the way up here at 31.88, 31.88.50, and it's just putting in new lows right now at 30.53 and a quarter. So it's a lot of movement, but usually when you get a lot of movement, it's followed by a lot of consolidation. So that was the opportunity that we had this morning. Okay, so back to the spreadsheet. If you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 11th day of June 2020. Today we lost 8 ticks in gold and we made 24 ticks on the ES. That put us at plus 220 on the morning session. And you can see I missed a bunch of trades. Today took 33 minutes and 4 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 6 trades this morning. So on the month now, we're at $2,786. That's over 9 days, averaging $309 per contract per 2-hour day. On the year now, we're at $39,201. That's over 106 days, averaging $369 per contract per 2-hour day. Okay, now, if you have not taken a free trial, you can go here to the homepage at CFRN.net. It says free 5-day trial, no credit card required. Click on that, and it's going to bring you straight to this page, EminiTradingSchool.com. On this page, all that we ask for is your name, your email, your phone number, and you can fill this out. It will benefit you if you do. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. And that, my friends, was the morning session. Dwayne, if you are ready, we can head back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park.
And we're back.
And we're back.
Like that. Okay. Recap of the recap.
33 minutes, 4 trades, $120 a contract.
Ding. I meant to get my backup bell downstairs. I gotta remember that. Okay. So, some of you who participated in the, I really need my bell for this, some of you participated in our big picture alerts. I issued the big picture alerts 2 Saturday nights in a row, and we had 2 really good weeks. Most of the alerts, I did the Dow, S&P, I did Crude, and we did the NQ. I don't think I did the Russell. I may have. On one of the weeks I think I did. But most of those big picture trades, which ran a day to 2 days, brought back north of $3,000 per contract traded. If you put it on at the entry price and stayed at it all the way to the final target, that's what the market made available. Now, past performance is no indication of future results. Not here, not ever, not anywhere. But with that said, that brings you up to this week, where we had sent out, my computer was down Saturday, so I sent out the big picture alert Sunday night. Then they never triggered, and price actually moved higher on the daily chart. We'll go over that in a second. So that allowed me to establish a higher entry price. 26780 was the original entry price, important area, because the Dow traded higher on Monday. It gave us a better opportunity to get in. And so we'll go to the daily chart and see where we're at right now. The 27,000, which was the entry, the final target, 26555. That's 445 points, and the Dow pays $5 a point, so the potential in that's $2,225. So let's go pull up the chart, take a look. Okay, Crude's falling off the map over here. We'll get to that in due time. Here's the Dow daily. So let me refresh this chart. This morning, those of you that were in the strategy session, first time I pulled up the daily chart, a couple of you remarked that it didn't look the same as yours, and you were correct. When I came back to my chart a second time, it scaled itself again properly, and then my chart matched everybody else's. So whenever you see that, mention it so that I can refresh my chart. Okay, so what daily? Okay, so currently price is at 25630. 25630. So we've already traveled through the final target, which was 26555. But then I went on to point out that the daily BBC, which I elaborated a little bit on the ES alert, I think, that really the final trade to target should be the daily BBC 25634, which is right here. 25634. Basically right about, let's see, what's the low of today's candle? The low today, 25554. Okay, so we've traded well below the, because the daily BBC in a falling market, the BBC, that price is going to drop. So this is where it was last night, and now it's dropped. And you can see that that's what's currently giving the market good support. Okay. Now the video from the pre-market strategy session and the second session that we did after the Wall Street Open, if you weren't able to get into either of those, the videos when they're rendered will be in the pre-market channel. So make sure everybody, because I keep getting a lot of requests, so now we know. All right, so let's look at the S&P daily, because that's the one we talk about every day that we really go into detail on. Let me just cover the fibs so I can get them off the chart. From the swing low, from the low of the pandemic sell-off to the recovery high rally, the shallowest Fibonacci retracement. And if that sounds like some newfangled thing, it's not. I think he lived in the 14th century, the mathematician. And this is all based upon something that's called the golden ratio. It's a deep subject. You can get lost in it. Or you can just kind of learn the basics and know that when price retraces, as it always does, because that's how markets work, leg, retrace, leg, retrace, leg, retrace. And when price can't go any lower, then it starts building legs in the other direction. Leg, retrace, leg, retrace, leg. That's just how markets work. From a 1 minute to a daily to a weekly. Okay. Now, so based on this 14th century math, this market, after traveling from this low to this high, Once a retracement is actually underway, it should pull back minimum to here, 29.82. So the BBC holding as support. Okay, we said yesterday, and we always say the same thing because we have some very basic principles that our methodology and strategy are built upon, and they never change. Like gravity. Gravity doesn't change. If you go to outer space, I guess it changes. But here on Earth, it's just one of those things that just is. So our strategy is built on the things in the market that just are. We didn't create them. We came to an understanding of, what they were, and so we use those very simple kind of building blocks to navigate the market. Here, on a daily, and the exact same principle on a 30-minute, same principle on a 5-minute, same principle on a 4-tick range chart. So what we've been saying is that as price came up, the first place we expected it to find resistance would be here because of this. Okay, that was support, and then it became resistance. Price traded down, it tried to come back up through this area, but it couldn't do it. Okay, so that creates this area right here. The area highlighted above is the price of the bearish cross, 32.72. That'll be a real important number when we get there. So we discussed fee bottoms and rounding tops. This is a big rounding top here. This rounding top only really lasted 3 days. And then in one day, remember I said it might take a couple days to get back to the BBC, but I said, however, we could do it in one session. And we have. So will this be good support? It should be good for a bounce, a really nice bounce. And then if it ultimately gives way, on the downside, we're looking at 29.82. So let me find that big picture ES trade, and then we'll dive into the Concierge Trade Alerts from last night. Big picture ES. Okay, so big picture ES in a, here we go, here's the update, because the price moved higher on Monday, we were able to establish a better entry than the original entry. The original entry was 31.57. Because price went higher on Monday, you got a better entry. When you're selling, the higher the price, the better. Because when you're selling, you want to sell high and then buy it back low. Okay. So from 31.75 to 31.40, that's 35 points. And 35 times 50, $1,750 per contract trade. So this is 31.75 to 31.40. I see we've traded, so 31.40 was the final target, but in a rapidly falling market, the daily BBC may be the final target. If it doesn't hold, then the 24% fib, what I was just explaining. And so last night when I posted this, the BBC was at 30.80. Look where it is now. It's at 30.53. 24% fib, that's not going to move. That's carved in stone. And so there's the 24% fib at 29.82. That may be the next step. If that doesn't hold, well, here's a real good area for support across here. Hopefully you can see it. It's right here. It's 38%. It held the market. Each time we pulled back into the BBC at the 38, but it held. We pulled back into the BBC at the 38. Now, it wasn't the 38 then. It didn't become the 38 until we put in this high. But when we lay the chart on top of it, now that we've established what this area is, we can go back and look at the price action See the importance of the area. Okay, so now on the way down, we know to watch for that. If it was good support all these times over here and then led to this rally, it's most likely still got some bounce in its step, some spring in its step. And so as we get here, boing, and then at that point, we're running into the bottom side of the BBC. And just as coming down we expect to be support, we start approaching it from below. Now we have to look at it as resistance until proven otherwise. And then one last thing on the daily down here. See, we're still actually above the 50-yard line. It is red, it is starting to hook down just a little bit. But there we sit, perched. Okay, so now if you want to grab a screenshot of the Concierge Trade Alerts from last night, you can do that as soon as I find them. Okay, I tried to get them out quick last night because if you follow the discussion thread, the thread in the discussion group, we were definitely on the bearish side of the market last night, that we were looking for opportunities to sell any rally. So, okay, hopefully you've got your screenshot. S&P. Last night's alert on the S&P was to be short 31.78. 31.78. I almost got that right the first time. All right, you know what I'm talking about. Okay, so sell 31.78. So now this report got into the hands of every one of our traders that wanted it at 6:10 p.m. Eastern. It's published in the Telegram channel, the private Telegram channel. And if you're on a trial, in the trial channel as well. Now, important prices, important areas are almost always tested. So as price comes down, it triggers 31.78. It takes us right into a weekly trading zone. And at a weekly trading zone, only one of three things happens. The most likely thing to happen is consolidation. Consolidation. We see it over and over and over. The second most likely thing to happen is rejection. That's where, when the 30-minute candle closes, the only thing left touching the zone is wick. Okay? And then the third and the least likely thing to happen is what we call the slice. And that's when price just rips through a zone like it's not even there. Don't see that one very much, but it does happen. So from 31.78, the final trade to target is 31.68. On every Concierge Trade Alert and Logic Alert, two different types of alerts, one based on historical price action, one based on current price action. But on both of them, the final trade to target is always on a short, the weekly zone below, and on a long, the weekly zone above. So from 31.78, we drop to where we would expect to find support. Support sent us back up to trigger again. Now, we only triggered twice today. Those of you that watch the show every day, you know that some days there's 3, 4, 5, 6 triggers right off the same alert area. Important prices, important areas are almost always tested. So from 78 to 68, that's 10 points, $50 a point, $500 per contract traded. Price gets back above the trigger, does it again. If you'll notice, the market loves to repeat itself. It will do things again and again. What's happening is price is just ponging. Remember that the first electronic video game, I think, Pong, where that little puck on the screen just, it goes from the left, buyers, to the right, resistance. And then, now price itself is a moving object. Sometimes it would go here and bounce up off the top of the screen and come at you at an angle, and you had to move your paddle. Okay? That's a very crude way of describing support and resistance. But it kind of works. If you tilt your head sideways and squint just a little bit, you can make it work. Okay. We come down to support, get back above the trigger, do the same thing again. Now, price rarely travels from zone to zone in a perfectly straight line, but this is about as perfect as you can get. Price does travel from zone to zone to zone to zone. We've published them since December 14th of 2009 every Monday morning for all of our members, and they're carved in stone for the week, and it frames the market so that whatever's happening with price as the week progresses, we always have a reasonable expectation of where the next leg of the journey will take us, be it the support above, the resistance above, or the support below. Okay, so this 3096 and 3091, we talked, that was something we established this morning in the strategy session, because I wanted to give everybody an example of how you size up the market, how you establish a position, a potential trade, a setup, whatever label you give it, and then to see it actually follow through. Here we got the slice, right? First we got rejection, then we got the slice. Now, when we do get a slice where price slices through a zone like it's not even there, when that move runs out of steam, price will quite often come back to test the zone. It failed to be good support, so price comes back up and we get a chance to see if it'll be good resistance. If it is good resistance, then that creates another leg to the downside. So we've already made the trip. Zones are an area. We get accustomed to them turning, like right at the zone. But sometimes you come a little shy. Okay? So we've had a leg. We had a retracement. That retracement took us from a low at 30.45 up to 30.65. So like a 20-point bounce, a 20-point range. It wasn't so long ago that the size of this candle represented the entire day's range in the S&P. 20 points. So, what a breath of fresh air these kinds of opportunities are, right? Can you imagine fitting your whole day inside that one candle? But yet people did it for years. Built careers out of it. Tall buildings in Manhattan. But this is the market we have today, so this is the market we have to address today. So from the entry on the Concierge Trade Alert 3178, we just traveled to 3058. So it's like a 120-point move at $50 a point. $6 grand. Wait a minute. What did I say? Did I say 120 points? From 30.60 to 160. No, 100 points. Just 100 points. Threw myself off. Yeah, it's $5 grand. Okay. So that's what the market made available. Remember, we're just the usher. We're the guy at the movie theater. Back in the day, when there was a guy at the theater with a little hat, and he had a flashlight. And if you came after the movie started, he would escort you into the darkened theater and shine his light on the floor so you didn't trip over anyone else's feet, so you could find your seat and enjoy the movie, right? That's all we are. Now, we shine the light with these alerts so that you know which way to walk, right? But there's a grander scheme than just that. We want to teach you how to shine the light. We don't want you to be dependent on us forever. Long enough to learn the methodology, learn the strategy, learn the indicators, and then you leave the nest. Of course, we enjoy it when you hang around, drop in occasionally, say hi as you go about your life. We're just a tool on the path to your ultimate destination, prosperity, whatever it is that God's called you to. We all know ministry costs money, and that money's got to come from somewhere. Now, the markets are not the solution for every person. And the only way you find out if markets are a solution for you, you can find out. And with the internet, modern technology, you can actually take a really good look, and it doesn't have to cost you a fortune. In fact, you can take our free trial anytime. All you need is a fairly modern computer and some basic computer skills, and you just log in, enjoy our live training room every day. You get to use our charts, use our indicators. We'll do our best in the course of a week to teach as much as we can about our methodology and strategy. It's pretty simple. And then at the end of a week, you're able to make a well-informed, intelligent decision if what we do is right for you. No credit card required. Don't need your mother's maiden name. Just go to eminitrainingschool.com. eminitrainingschool.com. Okay, last night's alert on the Dow was to be short 27265. 27. Did I already put that in? Oh, this was last night. Oh, we had ran up. Let's see, 27265. Oh, hang on, somebody's ringing. The bat phone. Oh, all right. All right, guys, John's here. I'll finish up the recap as soon as I come back. We'll chat with him for a minute. And then Dr. Tom's here at the top of the hour. Hi, John. Welcome to the show. John, you got an open mic.
Hello?
Yeah, you got an open mic.
Hello?
You have an open mic.
Oh, I do. Thanks, Dwayne. Thanks. Hello.
Hey, John. Welcome to the show.
Hi there. Sorry about that. Your phone didn't came through as private or something. Privé, actually, in French. Don't know why that is. Anyhow, look, the audience is not going to like what I'm about to say. I wish I'd been able to say this a couple of days ago, but unfortunately I was a bit under the weather. We have just begun, a sea wave to the downside of this market, and the implications of that are very severe and very profound, because the crash, if you remember, we said a while back that we thought that the crash of February, March was an A wave, was a three-wave pullback, right? And then we had this big rally, but the rally was a B wave. And actually, if you can put up, from 1990, from the 90s through today, I can kind of explain it better, because this is a micro version of what happened.
What is it you're looking for now? You're looking for?
for either the Dow or the S&P, going back to going back several decades. If you've got a
Yeah, I got it.
yeah. So you can see. Look, yeah. Here's what
here's
you
a
can
monthly
just
chart.
go back to. Okay.
How far you want to go?
All right, you got it perfectly. Just right there. Okay. The sort of thing that's happened is it's not quite it's visible on this chart, but imagine we're in 2001, okay, and back in February, and we came down and made had a pretty big crash, right? I mean, remember, this was about a 50% crash. Remember, we went from 12,000 to 8,000, and then this is the B wave. So this is a lot like the Nasdaq going to a new high over the last couple of months, right? And I think we just started the C wave, which is from 2008 to down. So given the way, so this is about a month-long crash potentially. That's ahead of us. Could be longer. And there's a lot of reasons why it could happen. First of all, the market's gotten way overvalued. There's going to be a lot of earnings coming out that are going to be real shockers. And unfortunately, all of the, this huge amount of unemployment is just sapping up the taxes. The government, the revenues are just way, way down. This is a huge problem. The state revenues are down. I mean, the whole thing is like an implosion. And so all of the sources of regular funding and everything are just like, they're actually like imploding. They're not expanding, they're contracting. So while the market's been great and this rally, it's all kind of inverted now, and this is going to feed on itself, because if you could go back to the chart before that you just had with today's gap. Okay, I mean, if you could just, okay, there you go. This gap is as bad, if not worse, than the one that started the February route. Okay, it's actually worse. And you've got an island top. Look at that. Is that amazing? Got an island top there. So
we've been talking about the rounding top that was building for the last few days, and so today was the day.
Right, and unfortunately, this is devastating. Probably put 16,000 as a target from here. The S&P might make a double bottom or slightly lower low. I think the Nasdaq will not make a lower low, but it will get close to it. And the good news is, beyond that, we are probably going to have a meteoric rally of consequence, potentially to new highs into the fourth quarter, and possibly into 21, I think for sure, but into the fourth quarter. So this is, I mean, remember, looking at the...
As I've told you guys, the S&P will always go higher over time. It's how it's built. The weaker kick to the curve, strong new companies are brought in. So, yep, you'll have these, and
well,
you'll have
to
these,
quote,
you'll have
to
these,
quote,
but
yeah,
always north.
To quote your mantra, Dwayne, important prices, are important levels are always
almost
tested.
always tested, yeah, they are.
And this is what's coming. This is what's coming. I mean, look at the double top on this before it crashed, right? Look at the double bottom that made it go back up. Right now, we're looking at a potentially devastating reversal, weekly reversal. And is it a weekly or a monthly?
It's a monthly. Here's a weekly.
Okay. Yeah, either way, look, you've got a double weekly reversal here, which is just as bad. Normally, these things are deadly. They tend to, I mean, we had one up at the top. Look at that. You see, we had an up week, and then we had a down week, and then bam. This is looking very much the same, and unfortunately, it's going to be even more terrifying than the first downturn. And it may S&P actually is probably going to go down to test this 2,000 number. So it's I mean, unless I'm not even sure the Fed can turn this thing around right now. Because
here's the good news is this is how markets work. So everyone will run around, the sky is falling, and you'll see all these very serious interviews on CNBC where they're putting their heads together, and all you're seeing in the background is just red numbers, red numbers, red numbers. And then all of a sudden, out of nowhere, the market will find a level where it's comfortable, support. It will start to build the next leg of the journey. And all of a sudden, just like yesterday, everyone was Tesla hit 1,000. Nobody could be more bullish. Every TV show, oh yeah, it's never been like this before. It's different this time. Now today, everybody turned Jim Cramer. Told you so. Told you this rally couldn't last. Told you it was overdone.
No,
all of them. Not just Cramer.
Super bullish like he always is.
It's funny.
He wasn't looking too good. He looked like a ghost this morning. So he basically screwed up again.
Oh,
listen,
my.
You know,
he
look
put
at the
people
18.
in Bear Stearns 2 weeks before they imploded.
I know. Look, Dwayne, we shorted that $164. Remember? Okay, here's you see 2018. Do you see how we went down in 3 waves? And then we had a B wave, and then we had that devastating C wave, right? And which was at the end, you know, from October through December, and then we had a 13-month, uptrend. In a way, this is, the bad news is we're probably going to go down here, rather dramatically and rather dangerously. But we will make a bottom down here that'll give us a better bottom for the next up leg, and the next up leg could be really something. I mean, it could be tremendous because
from the pandemic low to the recovery high. The first or the shallowest Fibonacci retracements to 24. That's just below our BBC. So we've said the BBC is the shallowest support next to 24% fib. And the one that really draws your
the other day. The fact that we're breaking that today is pretty bad.
Is 38% fib retracement. I think that could give us a nice bounce. Doesn't mean we're going to take out this high, but it should give a nice bounce.
Too suicidal, you could say that there is a chance that Fed 20. I mean, remember, on the way down we had a few rallies, but this one I think is going to be sharper. However, you have to give the possibility of this holding at the 2,800 level some credit,
absolutely, yeah. I mean, that's where the 38 setting, setting at 28.35, so that could absolutely hold.
Yeah.
If it doesn't, then you've got the 50.
Right. And look, with the sort of thing that could provoke this market down further is if things get out of control like they were in Seattle last night. We start declaring martial law and things. It could really spook the markets.
Wow, we got an interesting day going on here. Garrett just showed up. Hey, Garrett, welcome to the show. Dr. Tom just showed up, who's normally here on Thursday. Everybody's in the house. John's here. Guys, you all have open mics. Say hi.
Hi.
Make nice.
Hi, hello everyone. God bless you.
I got someone at my door, so you guys talk. I'll be right back.
Well, Garrett, I've just been telling the folks that I think this is a C wave to the downside, and unfortunately, it could be terrifying. It could be it could be actually even more dramatic than the A wave, than the February-March crash. Also today, the gold, which reacted favorably to the Fed's comments yesterday, the gold stocks are giving back most of their gains, which is a very bad thing. The silver, the USLV looks like it's turning down. So I think we're going to have a similar syndrome to what we had in the first down leg in the A wave, but where we could potentially come down, the gold could possibly come down to 1,600. It's holding up very well at the moment, and it might be able to avoid breaking much below the 1,700. But I think the silver is again has been very disappointing after being at 18. It's coming back down, and the platinum is not performing well, and neither is the palladium. So it looks like there's some sort of a test of the recent lows in the metals coming. But beyond that, I'm looking for an enormous buying stampede to develop that'll take us $1,000 higher in gold. I think we're going almost nonstop to 2,700, and I think the silver will get into, for sure, into the mid-20s, possibly even the mid-30s, or even higher, given what I think is coming.
Well, I'm going to have to jump off fairly quickly, but I wanted to mention a couple of things. We had heretofore, going back to yesterday, frankly, but even a couple of days before that, the Wizards of Wall Street were bringing up a fellow that I used to be at the speaking conference with years and years ago, named Marty Zweig. And they said, well, we're having a breadth thrust here because we're having these 9-to-1 days and 10-to-1, upside volume and so forth. We're having a breadth thrust. And I thought, well, let's see, we've rallied, whatever it is, 1,047 points off the low, which is, pushing 50%. And you're having a breadth thrust, and you only have those, there have been 13 or 14 of them since 1945. I don't have the statistic in front of me, but that was the deal. We're having a breadth thrust. So my comment was, NASA, we have a problem. Here's the problem. The thing launched and it blew up in space. And the bottom line is, I think the real question is, the big picture should be a realization that we're moving our way through a roughly 80 to 90 year cycle, and we're at the end of it. That should be realization number one. That should be more important than whatever anybody else can bring up as point number two. Point number two is, did we just have a wave 4 low and we're going to make a wave 5, and this is a little ABC correction on the way up? Or are we in wave 1 of wave 3 to the downside, or as you say, a C wave? I don't think, as far as being a C wave, that implies that we make a low even lower than the A wave, and then we go on and make a higher high, right?
Exactly. Well, the fact that the reason why I like this idea is because the NASDAQ did make a new high. And that's very bullish. When a B wave makes a new high, the C wave, when it ends, is a monumental buying opportunity. So, I agree with you. We are at the end of this cycle. And we might be only a month or two away from an opportunity to rebuy Boeing, maybe under 100, and maybe buy these airlines even cheaper than where Warren Buffett sold them. He's not, everybody's sort of saying he sold them too low, or, he missed the rally. The reason he sold them is because he probably knows that there's worse to come. And they're probably, he's probably going to be able to buy them back for less than what he sold them for at the end of the day. I think that, look, the government may do everything it can to try and stem this fall, but the size of the gap today this is a classic C wave. C waves take people completely by surprise. We basically closed at a new all-time high in Apple yesterday afternoon, and now we're down like a huge amount of points. So, and it's the same for all the FANGs, and usually when you get a gap of this magnitude, it tends to move away from it, as the day goes on, unless there's some kind of a meteoric rally this afternoon.
Well, it looked to me, the signal's almost identical to the one that we had in February, and we've got
exactly.
the gap.
We were just saying that before you came on. It is almost identical. Yeah.
I think the question is the market, at some point the market looks at reality. At the moment, we're not even close. The reality is we're ending a 90-year cycle. I guess the question is, do we end it now or sometime later this year? But the odds are we end it this year. If we end it, the outcome is deflation in a big way. because what you're doing by definition, when you finish a wave 5, you're going to have the largest correction in the entire pattern. If you want to talk about the entire pattern, most people go back to the 2009 low, and I'm going, well, what if you go back to, that's an interesting picture. What if you go back to the 1932 low? Now what's your pattern look like? What's your correction to that pattern going to look like? And that, of course, is the reality. 2009's, the recent walk in the park. I was talking to my neighbor yesterday, and he was talking about a friend that he had who had, made a lot of investments in shopping centers and was just, for years and years had been knocking the ball out of the park. And he talked to him again recently, yesterday, and they were just chatting. And what's happened? That's a capitalization game. So as long as your guys are paying rent, it's the best business in the world, and as long as there's people coming to this shopping center and blah, 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 that's a good deal. All of a sudden, it's hard to imagine how much this is down from the highs. I mean, his investment might be down 70% from the highs, and with no buyers, because now the tenants aren't paying their rent. So now your capitalization goes completely upside down, number one. Number two, nobody wants to buy what you have if you want to sell it. Then, and in the meantime, you've got the office guys going, the people who made the investments in office buildings and so forth, and they're going, and they're smug, and they're going, well, it's because you were stupid enough to invest in shopping centers, and shopping centers are going away. We're in office buildings. And lo and behold, what's happening there? All of a sudden, you've got a bunch of people that rent the office buildings that in the last 2 months have figured out that they can't afford to do it, number one, and a whole bunch of other people who can afford, realize that maybe the best thing that they can afford right now is to work out of the office that they have at home. So there you've got that thing going. So this, if it's not a
real estate
wave,
takes a big hit from this. That's
yeah,
thought.
I mean,
is
that
what you're saying?
This is the situation, and if this can be something other than let's say it's not the wave C. I'm personally hoping that it is the wave C, so that there's one more move up here. But if anybody bothers to look at the reality, this number one, this economy is not coming back. I don't care if you get 2 Donald Trumps in there. You've eliminated a whole bunch of businesses. You've eliminated a whole bunch of capital, and you've created a great deal more debt. I mean, these businesses are gone, and the ones that are still here are reducing at a major pace. I'm talking about some of these major companies that are knocking down the number of stores that we've got. So we've got an economy that won't come back in this cycle. That's a given. Not after 90 years.
Now, how big is the cycle? How big is your cycle?
From 1932 to yesterday.
Oh, okay. But
Yeah, but I
I'm saying
have a
going
question
forward.
for you.
I'm talking about going forward. How long, how long do you foresee doom and gloom? I mean, there's got to be a turning point somewhere.
I don't know if it's doom and gloom. If you're short, it's not so bad.
We were on the blessed side of the street today since last night when Globex opened.
God gives us life on the planet. Whether it's doom or gloom is pretty much up to us.
Yeah.
And then there's those things that we can't, that we can't control, like the economic cycle. So we've got an economic cycle, and the economic cycle that nobody wants to bother to watch anymore says that, you're late in this cycle, and when it ends, you correct all the excesses that happened during the cycle.
Right.
To whatever degree, whatever percentage you correct it, you will correct it. And that's easy. You correct it until you wipe out debt. When debt's wiped out, you start over again. So it's not rocket science, and you've got a ton of history to look at. All you got to do is follow it. You're going to have a deflation. What happens to gold in the deflation? Goes down. What happens to real estate? Goes down.
Can I ask you a question?
Please.
Sure.
This is Tom. How are you defining deflation?
Out of the dictionary. Inflation.
No,
inflation is too much money chasing too few goods, and deflation is exactly the opposite.
Right. So how can we have deflation without decreasing the money supply, without calling back loans and mortgages and so on? Because that's where most of the inflation has come from, imaginary money created, according to the Chicago Fed, by making loans on huge margins. So I don't see how that deflation can happen sans actually calling in loans.
Go talk to somebody who owns a shopping center and ask him whether his, that's how deflation happens. Deflation happens from selling.
Well, deflation though is not falling prices. That's a symptom of deflation. Just like rising prices are a symptom of inflation. It's actually just the real definition is increasing or decreasing the money supply. And I don't see any scenario where
No, that's the definition. That's not the, I don't believe there's anything in the definition of inflation or deflation that mentions money supply. Now you're talking about how it might happen, but it's not the tall or short. Nobody's talking about genetics. They're talking about whether somebody's tall or short. And then it's based on what are you comparing to? So inflation or deflation, nobody's talking about the money supply. That, in fact, is something that may or may not cause an outcome that you're looking for. It certainly doesn't define it. Inflation is defined, deflation is defined. Inflation is too many dollars chasing too few goods. Classic example, late 70s, okay? Lots of things running up in price. You had the money to run it. How are you going to have, let's say you know what happens when you continue to do what they're doing now? You have Weimar Republic, and that's what I'm afraid of. That's the scary thing. Do you suppose that the difference between now and the late 70s is the difference between need and demand? Do you know what the difference between need and demand are? Tom, was that you Tom, that I was talking to?
Well,
Tom, do you know the difference between need and demand?
I don't know. Tell me.
Everybody needs something or think they need something. These guys that are rioting think they need something. The difference between need and demand is they're the same, except demand has money. So lots of people mix those definitions up. They say, oh, well, back in the days when Russia was going to come online, oh boy, Russia's going to, we're going to, work with Russia and they're going to buy and they're going to expand our economy because they've got there's a lot of demand. There's a lot of pent up demand over there. And and at the time I was saying, well, no, that's not really true. What's over there is a lot of pent up need. It's a whole bunch of needs that people have, but they don't have the money. So I don't think there's any demand, at least not yet, which proved to be true. Right now, is there a whole bunch of demand right now? I don't think so, because I think you've got people, and we've just proven it, that a whole bunch of people that were a week away from a 1 month's check or 1 week's check, however they get paid, away from illiquidity. So you can't have any demand. I don't care if they expand the money supply. What if nobody's got any money? They're expanding the money supply. By the way, Tom, a question for you. When they put this money out here, $3 trillion or whatever it was, did you get any of that money? I mean the most recent one, after the $1,200 check. Oh, we're throwing money at the market. I didn't get any, personally.
I didn't either.
See, and so my demand hasn't changed. I don't have.
There is one thing that there's great demand for, and it's caused by all the fear, and that's precious metals. I mean, just in the last couple of months, we've seen a 600% increase in the percentage of Americans that own physical gold, not buying gold stocks or buying gold certificates or gold ETFs, but actual physical gold. And I know because in my client base, I have numerous millionaires who've been pulling money out of the stock market for the last year and a half and buying huge quantities of gold. So
what was, when you first bought gold, what did you pay for it?
When I first bought gold, $200.
Okay, I first bought it at $35 with one exception. I couldn't buy it because it was illegal. So I got interested in gold, and I got interested. I started doing gold at Merrill Lynch in 1971. Was Merrill Lynch impressed that I was buying at something so cheap?
What was the broker you worked for, Tom? You worked. He was at Merrill Lynch. You were at what's the other one?
Prudential.
That's where you were.
Prudential Base. Was it Prudential Base then?
Yes, it was. Yep.
Yeah. I
Back
remember.
in the olden days.
Yeah, back when everybody was buying everybody in that 70s thing. And what happened? I was buying. The only thing I could buy was gold stocks at that time. The only thing was legal. You got 4 types of gold. You got bullion, coins, stocks, and futures. And so.
Well, there is another category, but go ahead.
The
Well,
coins.
I think he's including that in the coins.
Yeah. Bullion and coins are pretty much. That's strike gold.
Well, there's
Right.
there's also the what we're calling numismatic coins, or what Dr. Tom calls investment grade gold. That's where coins
Yeah,
have a value beyond the face
Almost
value
all
of the
bullion
silver.
sold these days is not in bars. It's all in coins, in coin form. It's like 95% in coin form. So that's why I try to distinguish between coins and coins that are going to make you money, because bullion basically will protect you from inflation, but it's not going to ever make you money. Unless you're a trader.
Well, I mean, it makes you money from when you bought it in the late summer of 1976 at 105 and sold it in January of 1980 for $877. It made you some money.
Well, I was around in that time frame, but if you look at the inflation during that same time period,
Is that when mortgages
money
hit
got
18%?
The inflation is look at the inflation. The inflation is what drove your gold price up.
exactly, and that's my point. When I sold my gold at 800, I couldn't buy anything more with it than I could have bought when I bought it at 200.
Who cares? Did you buy it to buy other things with it, or did you buy it to protect yourself and make a profit?
I bought it for a profit. I don't invest for insurance. I invest for money. But I didn't realize at the time what a big bite inflation took out of it. So, I had $250,000 worth of gold at 200, and now for the first time in my life, I could call myself a millionaire, and I was fat, dumb, and happy. I did not understand inflation at that point. And when I was a stockbroker, I still didn't understand inflation. They never taught us anything about that. We would tell your client,
No,
you made 3% this year on your bond portfolio, but they actually lost 2% because of inflation.
Well, remember, you hadn't had runaway inflation. You'd have to go back many, many, many decades. There was no runaway inflation in the cycle until that point in time, until 75, 76, coming out of the 74 thing, and then it started going, and then it took off. We sold on the day of the high when it hit 877, it 862 for all of our clients and so forth. But at that time, everybody was telling us, this is what I was going to bring up before, Tom. I've heard that gold's going to 5,000, 10,000 more times than probably anybody else around, other than James Dines. Maybe he was a little bit before me, or Jim Sinclair. But other than that, I've heard it all the time. Gold's going to do this and it's going to do that. Things do things based on where they are in the cycle.
Right.
In other words, if you went to go to the college grad school classes and you say, I want to help the economy. How do I do it? Well, you lower rates and expand the money supply. Oh, okay. So I say, really? I said, let's say we're in late 1979 and I ask you the same question. Gee, we're having some problems here. What do we do? How do we fix this economy? How do we get this economy, going here? We're in the midst of a runaway inflation. Do you lower interest rates and expand the money supply? I don't think so. Because if you do, it's just like having a whole bunch of people running around with buckets, and they got a bucket of liquid and throwing it on the fire. But if that bucket of liquid is gasoline, guess what? That fire ain't going out.
Well, I teach biblical economics at a seminary, and I define inflation in 3 different ways. We have the insidious inflation that we've had since 1933. Then we have hyperinflation, which we had thanks to Jimmy Carter, and double-digit inflation. That's hyperinflation. But we have had runaway hyperinflation in this country, and they take it out of all the history books, but we had it. Our very first U.S. dollar, went to like about 1/10 of a penny to the dollar. So we had Weimar Republic type inflation, hyperinflation, runaway hyperinflation in this country at our very beginning. So people always say, well, we could never have that today. Well, why not? Well, because this is America. I said, well, what else do you have? You know, because
cycles, we've had 3 cycles. We're in our 3rd cycle now. So you've had all that stuff before, and now with 3 cycles, not only are you coming up to a depression cycle every 80 or so years, you get a depression cycle, but 3 of those give you a revolution cycle. And oh, by the way, what's going on out in the streets right now? Are these mad Democrats? No, these are funded globalists who are trying to do what they've been telling us for decades that they're trying to do, which is create a new world order, which means we're real rich guys. We want to run the world. We want you to do what we tell you to do.
The problem is not so much the guys in the streets. It's our leaders who are afraid of them and are bowing down before them. I'm sorry, I'm not going to bow to anyone but God.
Well, the problem is the guys who were, you got to go to the head of the snake. We're
George
taking
Soros.
things, there you go, bingo. And again, he's merely a lieutenant. It goes up from there, but nonetheless, if you want to stop this thing, go over and grab George Soros and stick him in a panel truck and take him somewhere and say, George, make a couple of calls, will you? And this thing will stop right away. But but short of that, like I say, we wind up defining things with events, and I'm saying that's okay if you're talking about a certain type of, as you were doing, Tom, you're talking about a certain type of inflation, and the best way to define those is to discuss a certain time when they happen. Now, the inflation in the late 70s is significantly different than the inflation that we have now. The reason that one was so successful was at least for a couple of reasons. One was it happened in the time of the cycle when it's supposed to happen. In other words, your peak in inflation was 1980. You go back 60 years from that, you had a peak of inflation in 1920. So all these things fit in the cycle. It's kind of like putting a puzzle together, and you go, gee, look at that. This piece fits right where it's supposed to fit. Imagine that. And yet, when we discover that, when I was talking from myself now, as we were going through the cycles in the early 80s, I remember going back and seeing the peak of inflation. And then I saw the last one in 1920s, and then what happened in 1922, year or two later, you have a serious recession. Year or two after 80, you have that was the last time and the only time that I remember that the people on the news were talking about a depression. Was in 1981 and early 1982. Hang on one sec. James, I got to call you back. Anyway, so the other thing that happened that I remember is I don't remember when Willie Nelson had his Live Aid concert, but it was when America was at that early 80s, right? In the Midwest.
Well,
yeah,
no.
the Midwest.
Yeah, it would have been about like 85 maybe.
Yeah, I mean, as I read, somewhere in the early 80s, and in the Midwest was a dust bowl, and it was a real problem. And then you go back into the early 20s, and that's when the term dust bowl and all that was happening. So these things fit in. You can just plug and play, right along there. It's incredible how they happen. Anyway, I just I've got to jump off here, Dwayne. You've got some.
All right, buddy.
You've got some great guys on there to chat with.
Thanks for coming in, mixing it up a little bit.
Yeah,
before you go, Garrett, can I just ask you and John, really both, because I've been doing some studying on the parallels between the Depression and our current situation, and I agree with you totally. There is not going to be any V-shaped recovery. It's going to be a U-shape, and the bottom part of the U is going to be very long. But here's the thing: there were 3 metrics, if you will, that defined the Depression. One was the crash in the market that triggered it. And of course, they had a recovery from that, but that was around 29%. We just had a 34.5% crash with a subsequent recovery. And I think it's going back down. People keep asking me, when's it going to 30,000? I tell them it's going to be 15,000 long before 30. That's just my opinion. The second thing was unemployment. We always hear about 25% unemployment. It's actually 24.9%. Our official unemployment rate now, the government's telling us around 17%. Most economists I know tell me whatever the government says is the unemployment rate, multiply it by 2.1, and you've got the real number. Anybody who believes that only 17% of Americans are unemployed is not talking to anybody around the country, which I do constantly. We're way north of 30%, so higher than depression. And then the other is growth. I mean, even the White House admitted last month that we're going to end this quarter with about a 30% negative GDP. Now they're changing the tune, but a lot of people who are smarter than me are saying it could be like 38 to 40% negative GDP. And in the Depression, they never got anywhere near that low. So basically, I thought I understood what a depression was, but I didn't. A depression is basically a long recession. There's no difference in the definition of recession and a depression except the length of time. So everybody agrees we're in the greatest recession since the Great Depression. A lot of people think we're actually in a depression right now, in the beginning of a depression. So I just like to get both y'all's opinions on that.
I'm gonna have to jump. It's way too long of a discussion. I will say this: recessions and depressions are very different. They're different like the seasons. Spring is different than summer. They're similar. You can have a hotter day in the spring than you have in the summer, but spring and summer are very different, and so are autumn and winter. That same type of growing cycle permeates throughout almost every cycle for pretty much the same reason. Each step in a cycle sets up the next step. So a recession is part of the secular process that goes from boom, to fading boom to, and again, the recession and then sometimes you don't always get a depression. You go through, like I say, every 40 years or so, something bad happens. That's a serious recession. In this cycle, that was the recession of 1973 to 74. Interesting, Republican president, Watergate, impeachment, now, 40 years later, then every 80 years or so, you get a depression. They're dramatically different. Here, I'll give you my definition of a recession and a depression.
Sure.
A recession is when your neighbor's out of business. A recession is when your neighbor's business goes belly up. A depression is when your business goes belly up. Anyway, that's kind of a horrible joke, but there's a lot of truth to that. Recessions are something that happened to somebody else. Depressions, they hit all of us. But anyway, hey, I apologize. Nobody I'd like to talk with more about this stuff and at length, but I've just got lots of stuff going on right now that I've actually got to attend to. So I apologize. I'm missing a great opportunity, but maybe we can set up a time and do it again.
Yeah, sometime we can have a round table sometime.
Yeah, it'd be fun. I'd love to do that. Well, listen, all the best to you guys. Dwayne, thank you so much for the time, and I look forward to talking to you guys soon.
God bless you, brother. Good talking with you.
You too. Thank you, Tom. Bye, John.
Garrett, what are your thoughts? John, Garrett just said that, recessions don't necessarily lead to depressions. Well, absolutely true. We've had 42 recessions since this country was founded and only one depression. But I was quoting what economists have said, that basically a recession and depression have the same characteristics. It's just the depression lasts longer, so the effects are deeper and felt by more people. But what's your take on this? Maybe John is no longer with us. Okay, Dwayne. All right, I'm not hearing anybody. Testing. Microphone's still working.
What's up?
Oh, I was just wondering because
Yeah, you're
no one else was talking.
Oh, okay.
I thought John was still with us and was asking him about what he thought about what Garrett and I were talking about.
What did you have something planned that you wanted to talk about today?
Yes, I did. But listen. Oh, excuse me just a second.
I can shoot to the screens if you need them.
No. Breaking news.
What's up?
Breaking news. A group of armed thugs have established a new country inside Seattle, Washington. Shocking. There's signs at the entrance saying, leaving the United States, you're now in the autonomous zone. And they're guarding their zone.
I don't think this is the first time somebody's established a sovereign state, is it?
Well, we got a number of them with Indian reservations around the country, but
Seattle
they're just
autonomous
basically
zone. Yeah, I just found the news posted. Yeah, okay. So let me go to the headline, not the video.
But they're using AK-47s to enforce their zone. The police have totally retreated. They've taken over a police precinct,
And
they're now shaking
blocks,
down
right?
7 city blocks. They're shaking down the business owners in that area and making them pay for protection. And the people that live and work in that area are scared to death.
Yeah. It says if anyone has been subjected to, this is the crime of extortion. If anyone has been subjected to this, we need them to call 911. This is from the Assistant Chief of Police, Deanna Millette. So the picture that I see a picture. Here, let me just show it to everybody. This is now property of the what people? Can you read that?
They've been calling themselves various different names, but first they're called the Capitol Hill Free Zone.
The Seattle people. Oh, maybe it says this is property of the Seattle people.
Yeah, and they're also calling it the
Capitol Hill Autonomous Zone.
Capitol Hill Autonomous Zone, CHAZ. But it started when the mayor told the police to abandon their main precinct, which is downtown. And now the police chief saying, no, we're not going to bow down to extortion. Look at this guy with the AK-47. They're all around. There's only 6 entrances to the area. And the chief police has been down there negotiating with them and saying, do you have enough food? How about sanitation? Do you want us to bring you some porta potties? The police and the mayor are totally supporting this. And the governor was asked in a press conference, what do you think about this situation in Seattle where they're just basically taking over a country, a city and calling themselves a new nation? And he says, I haven't heard anything about it. I mean, if he hadn't heard anything about it, he's either the stupidest governor that ever lived.
It's just a matter of establishing dialogue. We'd love nothing more than to be able to open our precinct buildings. What we want to do is give an opportunity for everyone's tempers to calm. And first to, well, I mean, yeah, I don't want to see them roll tanks like they did in Tiananmen Square, But this needs to be put down right away.
Yeah, and the president has said if Washington doesn't do it, he's going to do it.
Good.
Yeah.
Send the Duck Dynasty gang out. They'll take care of it.
Well, So my solution is that we notify all the innocent people in that area to leave, just to get out of there. If you're not one of the thugs, get out. And then cut off water, electricity, internet, and don't allow any food to be brought in.
Take back your
And
city
let
now.
them-
If you don't do it, I will, Trump wrote. This is not a game. These ugly anarchists must be stopped immediately. I agree, 100%.
But if you do those things, if you cut them off and let them just marinate in that for a little while and see how weak they are, a lot of them will desert.
Oh,
They'll
yeah,
just
yeah, yeah. Hold, Dad, don't let the
get
pizza
out.
delivery guy through. Absolutely right. Starve them out, you know?
And
Nobody
then
gets
once,
hurt.
once that's
They
happened,
just get hungry, right?
once that happens, then we go in and enforce. We don't go in with guns blazing. We go in well armed,
With pizza.
well armored, and if one of them starts to shoot, then you take them out. Otherwise, you tell them, drop your weapons, get face down on the ground. We're going to handcuff you and take them off to prison. Because I was talking to another gentleman today, and he brought up something that I hadn't really thought about. This is actually an invasion of our nation, because although it's an internal invasion, people from within,
These people are
Seattle.
traitors.
they are, and they're taking over sovereign territory and claiming it as their sovereign territory. So that's an act of war. That's an invasion.
Is that the is that is that the pot calling the kettle black? I mean, that's not racist, folks, but isn't that how the saying goes? The pot calling the kettle black, or
The kettle black.
yeah. It's like jumping out of the pan into the fire kind of thing, right? Okay. Anyway, back to you.
Yeah. So, everybody's, well, not everybody, the Democrats and some of the rhinos as well are whining about, oh, Trump's talking about taking military action.
That's Republican in name
Well-
only for those who didn't know. And honestly, until
What?
recently, when I asked my wife, I didn't know what it meant. So don't
You
feel
didn't know
bad.
about that? So like for instance, Mitt Romney, how in the world he got the Republican nomination ever, I don't know, because the only reason he's a Republican is because that's the only way you can get elected in Utah. But anyway, in the past, the Insurrection Act, which basically gives the power to Congress to put down rebellions, but Congress didn't want it. It's a hot potato. So decades ago, they assigned that power, they delegated it to the president. So today, by law, he has the sole power to invoke the Insurrection Act. Well, people say, well, what about posse comitatus? And that is a doctrine in the Constitution and in law. And that says that
It sounded
the
like it was
US
from
military-
the Jungle Book.
Hakuna Matata.
Yeah. What was that? Say that word again. What was it?
Posse comitatus.
Yeah. Okay, that's a first for me.
P-O-S-S-E. It's just like it sounds, like a posse. And that's why Trump was so careful when he sent troops down to the border to stop some of the inflow of the illegals. He didn't have them in any law enforcement capacity. He had them supporting the Customs and Border Patrol agents, doing some of the surveillance, running logistics, that kind of thing, freeing up agents from diapering babies, right, and putting them down on the border. Because without invoking the Insurrection Act, the U.S. military cannot be used to fight against the American people. You don't want a standing army that you have to worry about them turning around and attacking you.
Right.
But once the Insurrection Act is invoked, then there is basically unlimited power to do whatever it takes to put down a dangerous rebellion. I mean, these people are pushing us to the brink of civil war. They're trying to divide people any way they can. Cops against citizens, blacks against whites, poor against rich. We've always had those things, but now they're really driving the wedge in, and we could end up with a bloody civil war in the streets. I talk to people all over the country every day, and I say, how are things there? Oh, it's very quiet. We haven't even had any protests. Other places, I'm scared to go downtown because I'll be killed. And they don't care. They're killing black people. They're killing white people.
They're equal opportunity thugs.
Yeah. So the president not only has the right and the authority, he actually has the obligation
Amen.
and the responsibility to invoke the Insurrection Act. So if
he promised he would do, he swore an oath to protect the American people to the best of his ability. So I want to see. I'm ready. I'm ready to see best.
yes,
How do we do this? I don't want to see anybody hurt. I don't want to see any old men pushed down in the street, which, by the way, they say that may have been staged, but of course they would. I don't know. No, I don't think we have to stoop to their level. I mean, we have rubber bullets. If you shoot a man with a rubber bullet in the right place, he will not die, but he will lay down.
he will regret not obeying a lawful
He'll
order.
sit down and behave, and then, deal with them according to the law, whatever that is.
Well, the mobs in general are demanding that police not use pepper spray, not use tear gas, not use rubber bullets, not use batons. Well, what is
What if
the
the
alternative?
Japanese had asked us not to use bullets? I mean,
Yeah, yeah. So-
because this
so-
is no different. We have an enemy on domestic soil. Okay. The only
Yeah.
difference between these people and any other enemy of America is that they're standing on U.S. soil. Most of the people that commit this foolishness do it on foreign soil. So we have to go over there and kick their butt. Well, we got to do whatever's necessary here to protect the law-abiding citizens of the country.
Because you're right, they are domestic terrorists.
They are. That's exactly
They're not
what they
just misguided people. They're funded by George Soros and his ilk, and people that want an international one world government. And what's the best way to do it? Tear down the existing governments. Get rid of the police departments. These guys
What
in
does
Seattle.
George really care? I mean, if he lasts another 10 years, I mean, I don't know. I don't know how old he is, but I mean, not like he's a young man trying to, correct the world so that he can live in a world that he approves of or agrees with. George,
Well,
have
I
you
don't
looked at a
know,
mirror lately? You're going to be meeting your maker here. You're definitely in the fourth quarter of the game. So
I don't know what the man's motivation is. I mean,
I
maybe
don't
his
either.
mother beat him in the crib or something.
maybe.
But he is just so full of hate, and he's done some unbelievable things. Like, do you know he came within a nickel of completely bankrupting England.
Well,
Just
he
he
did
can make some money
bankrupt-
off of
He
it.
did bankrupt the Bank of England, if I'm not mistaken.
Yeah. Well, he made a few $1 billion shorting the pound all the way down, and it cost them trillions of dollars, 10 times as much, to repair the damage that he'd done. So he almost destroyed the country, and he just did it because he felt like it. But
Because he
the guy is truly evil. Now, have you heard the demands of these terrorists in Seattle?
I've heard the cry for disbanding of the police, but beyond that, no, I don't know that I have.
Well, they want the mayor to resign, but before
Okay.
she resigns, they're insisting that she totally disband the police department and the court system. They say, we'll take care of you. We'll have our own justice. And, if they let this stand, they'll expand and take over the entire city of Seattle and then go beyond there and try and take over Washington. Because Seattle is known as a hotbed of anarchists. Most of the anarchists that you find infiltrating these peaceful demonstrations around the country are people that live and sort of base themselves in Seattle and then go out and cause trouble and try to get people killed and so on in other areas. They're cowards. They've got very sophisticated electronics. They have earwigs. like the Secret Service does. And if they see the police coming in one area, they direct their fellow anarchists to send people to another area, and so on. And then they don't put themselves in harm's way at all. They're never on the front lines. They're the ones out there egging people on and starting the chants and so on. So that a lot of the peaceful people end up becoming looters. You know, they say, well, everybody else is doing it. Why not me? To me, that if you're actually a peaceful protester, when that stuff happens, you ought to turn around and head back home, because you're putting yourself in danger, and you may end up going to jail. You know, I wrote an article. I said, you know, don't bring a sledgehammer to a peaceful protest, because you see people in the sort of peaceful stage of these things, but they're carrying lead pipes, they're carrying crowbars, baseball bats, and so on. And then when the signal's given, usually after it's dark and it's harder to identify them, then they start smashing and burning. And the mayors are saying, well, you know, just let them get it out of their system. They have to vent their rage. So if they have to burn a few buildings, it doesn't really matter, you know, because buildings can be replaced. Which is, you know, I was a cop. I didn't swear an oath just to serve and protect people, but actually the police oath is to serve and protect life and property. So I did an article just recently on two different police chiefs. One is the black police chief of Detroit, and he was a kid. He lived through the Detroit riots when dozens of people were killed, and it was just total anarchy, and much of the city was destroyed. It's one of the reasons why Detroit's the only major city in America ever to go bankrupt. Sacramento did as well, also another Democrat city, but I wouldn't call that a big major city. Detroit, you know, the seat of our manufacturing of automobiles and so on, bankrupt. So he swore that was not going to happen on his watch, and he told his cops, the first infraction, the first broken window, the first time somebody punches somebody, the first time somebody tries to tear down public property, no matter how minor the crime is, if it's a crime, you arrest them, and you arrest the next guy, and you arrest the next guy. After a little while,
well, after you arrest the first two guys, there is no third guy.
Yeah, but now the opposite of that is the black female police chief of Raleigh, North Carolina. They're burning buildings there. And who knows who's upstairs in that building? Right. There could be a family cowering in the corner of the building trying to get away from the riot, and they just burned the building down, you know. So she says, I'm not going to allow my officers to be put in harm's way just to save a building. Well, it's not just a building. It's saving civilization, basically. And it's also saving neighborhoods.
Nero fiddled while Rome burned.
Yeah. I saw this one interview with a black lady, can't remember which city it was in, but she was just crying. She said, they've destroyed my neighborhood. I have no place to shop. I don't have a car. And these stores that they burned were the only place I could shop. Now, you've heard of food deserts, right?
Mm-hmm. Right. Mm-hmm.
Well, that's what a lot of inner city areas have become.
They have.
Food deserts. They can't buy food locally.
Grocery stores have been forced to the suburbs.
Yeah. And Target stores has been one of the ones that have stayed in the inner city areas, but now they've closed 200 of their stores. A lot of them, they can't get insurance anymore because of the riots and so on. So they're left with just the little mom and pop shops. Right. And I saw this horrible video of this Korean lady, because for some reason a lot of Asians tend to run the little shops.
They do.
And they have to charge more for the food because they can't buy the volume that AMP does.
Right.
But at least they have food there that people can buy.
Yeah.
They took this woman who tried to stand in front of her shop, a little 5 foot tall, tiny, skinny lady, and there was 4 big black guys beating her with 2x4s. And her husband comes out, says, leave my wife alone, and they beat him to the ground. I don't know what the end of it was. I don't know whether they lived or died, but that's what it's come to. So they're committing suicide. They're destroying their own neighborhoods. And a lot of them are minority-owned businesses.
Right.
Probably the majority of them now, because most of the major chains have pulled out. It's insanity. So I just hope the president is going to keep true to his word, and he's going to stop it. Because if he doesn't, we're not going to have a country left.
It's not good. It's not good. This lockdown that was forced upon us, I think, is one of the largest contributing factors. A lot of people were kind of pent up, stir crazy, had too much time on their hand, watched too many far left or far right videos on YouTube. Their brain turned to mush, and then when they got a hint of fresh air, it was like putting a match to kindling, and poof, all of a sudden America's on fire. And
yeah, you're right. If you just cooped up like that, now all of a sudden, before you weren't allowed to be within 6 foot of anybody else, and you had to wear masks and stuff like that, and the mayors were actually arresting people for leaving their homes.
Or trying to open their business or hold a church service.
Yeah. Well, New York City, de Blasio is the poster boy. I mean, this guy, Cuomo, should remove him from office and appoint someone mayor of New York City. Because this guy, first of all, he forced the nursing homes to take in virus-ridden patients. So 6,000 people died in New York City nursing homes. That's a fourth of all the people that died throughout the whole state. And to your point about, the lockdowns being negative, it wasn't just negative economically. We're probably going to find, when this is all over with, that more people died as a result of the lockdowns than ever died of the virus, because suicides are up dramatically, depression is up dramatically, domestic abuse is up, and a lot of people, they just can't handle it. It's like being put in solitary confinement. But then the mayor says, he's sending police cars to break up prayer meetings in Jewish churches. So they were synagogues. They were doing it the way that the guidelines were, 10 people or less. Mm-hmm. But they're having prayer meetings. Right. And he sent squad cars to tell them, you break up or we're going to arrest you. And then a week later, he's allowing hundreds of thousands of people to march through the streets of New York, side by side, arm in arm. What happened? Did the virus just disappear? Social distancing is no longer necessary? No, because if they're causing anarchy that benefits him, okay, he looks like an idiot, but when I say it benefits him, they think this is going to keep Trump from getting reelected. But I think it's going to have the opposite effect, particularly this thing in Seattle, because everybody in the country is scared. Everybody I talk to, even people who are never fearful, if they're honest, they're scared. They're scared for our country. So, yeah. And I can see it in my business. I mean, the number of people buying physical gold has increased by 600%, and that's as of 2 weeks ago. It's probably more like 800% now. People that never would have thought of buying gold before, they realize that this is going to be the only thing that's going to keep them safe if anarchy comes and the dollar becomes worthless. So my phone has been ringing off the hook. I had to actually turn the ringer off so that I could talk to you today, because otherwise it would have been ringing constantly and interrupting. So,
well, folks, if you need some of that gold, go to CFRN Gold. That's one word, CFRNGold.com, and get in touch with Dr. Tom. Tom, you want to give him your phone number?
yeah, it's 561-753-5998, 561-753-5998. That's direct line to my office. And just please make sure that you mention that you heard about us on Dwayne Reese's show, CFRN, okay? Everybody stay safe, stay out of the downtown areas, wear your armor if you have to go downtown for anything, and just pray for the Prince of Peace to bring peace back to this country, because this is not the America I grew up in. This is not the way things are supposed to be.
You and me either. You and me either. All right, brother. God bless.
Bless you. Have a great day.
Take care. All right, guys. Our audio stream did not go out on YouTube today. I'm just realizing only my side of it, not the other side of it. Okay, so I got to fix that. We've walked through most of the markets. And not much to say. If you missed the strategy session this morning, watch the video. I'll be posting those shortly. And we may do another strategy session tomorrow morning. There'll be two videos. One was the pre-market strategy session, and then the session that we did after the markets open. Okay. All right. Good word for the day. People are always looking for approval. Behold, as the eyes of the servants look to the hand of their masters, as the eyes of a maid to the hand of her mistress, so our eyes look to the Lord our God until he has mercy on us. It's always nice to be appreciated for the work you do. And when that doesn't happen, it can affect your sense of self-worth. That's why the Bible says, as the eyes of servants look to the hand of their masters, our eyes look to the Lord our God. Your true worth comes from God, not your boss. When you forget that, you set yourself up for frustration in the workplace. Taken to the extreme, you become less effective on the job because you're not willing to make decisions and take risks in case it negatively affects what others think about you. I learned a long time ago, what other people think about me, it's none of my business. Think about that. What other people think about you, it's not even your business. That's their business. The only thing you care about is what God thinks. Your value to the company you work for, the organization you belong to, the family you're a part of, plummets when you're not utilizing your God-given gifts to the fullest. Whatever your position, it's only a small part of who you are. A spoke radiating from the center of your identity as a son or daughter of the King of Kings. You're not the hub turning the wheel. Knowing who you are, apart from what you do, is as essential to your success in the workplace as your credentials and your skill set. When others know that you constantly need approval, it empowers them to manipulate you, define you, and influence your self-worth. That's too much power to give to anybody. It doesn't matter what your job entails. Remember 1 Corinthians 10:31. whatever you do it all for the glory of God. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Ding. Gotta find that bell.